I'm Russell Clark, and this is VixShield's Market Close Recap, where it isn't news till we talk about it. Here's what actually happened today. This morning we laid out a clear picture. We said watch how the institutions would absorb that improved GDP print, respect the range, and quietly sell volatility while the headlines tried to manufacture fear around Powell, oil, and geopolitics. Well, folks, that's exactly what played out. The S&P ground higher in an orderly fashion. The VIX didn't just tick lower, it bled nearly 10% on the day. By the close, our community sat back with iron condors placed right where the RSAI told us they belonged. The market spoke. We listened. And once again, the methodology delivered. You could feel the shift right from the open. Overnight flows were calm. Asia and Europe had already digested the numbers. Then the cash open came, and big money simply refused to let the price break structure. Remember what I told you this morning? Institutions were harvesting volatility inside a textbook negative correlation with the VIX. They did exactly that. Every time a headline popped up about Iran supply risks, or China PMI softness, or whatever the financial channels were pushing, the tape just shrugged. Midday, we saw a little volatility pop on the Alphabet earnings celebration, but even that was absorbed. The afternoon drift was steady, almost peaceful. By 3 o'clock, the close felt earned, not euphoric, earned. And that's the part the retail crowd never seems to grasp. They chase the narrative. We read the structure. Now let's talk about the traps that fired today, because several of them did. The financial media spent all morning beating the drum about new record highs and how this bull run supposedly has a clear line in the sand. You know the game. They hype the upside until everyone piles in, then quietly shift to the downside risks the moment sentiment flips. Classic Wall Street playbook. Retail hears S&P pushes to fresh record, and they buy the top with both hands. Meanwhile, the smart money was doing what it always does on days like this, selling premium into strength, layering protection, keeping positions sized properly. We saw the same trap in the cross markets. Oil spiked hard on Middle East noise. Crypto took another leg lower. The dollar found footing while gold gave background. The financial press treated every one of those moves like a separate crisis. Is this risk on? Is this risk off? They asked it so many times, you would have thought the sky was falling. But our community knows better. These are the classic head fakes designed to shake weak hands right before expiration. The establishment profits when retail panics and sells volatility at exactly the wrong time. We don't play that game. We built VixShield precisely so we wouldn't. This morning I warned you that Thursdays require extra caution. Lead with the downside. Respect the process. Protect first. And that's exactly how today felt, even as the index climbed. 1 day left in the trading week. Anticipation building. The premium we collected sits in the account, but the market can always deliver one last surprise before the weekend. That's why we stayed disciplined. That's why the adaptive layered VIX hedge kept all 3 layers active, even though the premium gauge didn't quite trigger a fresh entry. Short-term spike guard, medium-term wave shield, long-term endurance hedge, all of them standing watch. 1 to 2% annual cost for the kind of portfolio insurance that has historically offset 30 to 50% of iron condor losses in 10% drawdowns. You can't put a price on sleeping well at night. Now let's talk about what worked and what we learned. Our iron condors sat right in the sweet spot all day. They didn't get touched. They didn't even get breathed on. The RSAI verified strikes once again proved why we trust this engine. Entry gates passed. EDR temporal reading came in strong. VIX stayed comfortably below 20. Contango remained healthy. That spread between the spot VIX and the 3-month VXV told the real story. The market expects volatility to stay contained near term. That's favorable for premium selling. That's the edge, and we took it. This was the third consecutive place signal. Think about that. 3 days in a row, the methodology has lined up perfectly. Not because we guessed right, because we follow a process grounded in decades of market reality. What we learned today is the same lesson we keep coming back to. Patience beats heroism. Structure beats narrative. When the VIX is declining and the term structure is in strong contango, our job is simple. Execute, collect, protect. Let time decay do the heavy lifting. The forward roll on the theta time shift also deserves mention. With the temporal reading where it was, extending the horizon a bit to capture additional vega made perfect sense. These are the quiet adjustments that separate consistent traders from the crowd that blows up every few years. We don't chase. We don't double down. We roll when the math says roll. We stay inside the fragility curve instead of pretending our portfolios can scale infinitely without protection. That's how you survive. That's how you compound. Zooming out to the bigger picture, today fits perfectly into the weekly narrative we've been building. The Fed held rates steady with the most divided board since '92. Policy risk already priced in. That improved GDP print from negative 3.8 to negative 2 was treated as a bottoming signal rather than a catastrophe. China shows strong exports but soft domestic demand. Trade tensions normalized. Unemployment, PPI, all of it absorbed without breaking the S&P bid. The smart money isn't listening to the talking heads declaring the Powell era over or claiming macro is dead. The smart money is doing exactly what we've been watching for weeks. Buying dips, selling vol, layering measured protection. They understand that beyond a certain size, every additional layer of market complexity adds more stress than stability. That's the fragility curve in action. And that's why ALVH remains fully active with all three layers standing guard: short, medium, and long, ready for whatever comes next. The VIX futures term structure curve deserves extra attention on a Thursday close like this. We saw strong contango today. VXV sitting noticeably higher than spot VIX. That upward sloping curve signals the market expects volatility to remain manageable over the next 1 to 2 weeks. That's important. It tells us the big money isn't pricing in a major shock event in the immediate future. Our adaptive layered VIX hedge responds beautifully to that kind of environment. The short-term layer guards against sudden spikes. The medium-term layer handles any multi-day waves. The long-term layer provides endurance if something geopolitical flares up over the weekend. All three active, all three calibrated. This is protection done right, not reactive, proactive. And tomorrow, we'll be ready. Friday brings the last trading day of the week. We'll be watching the core PCE numbers that everyone's circling on the calendar. Those are the inflation prints that could still move the VIX in a meaningful way. We'll watch how the 10-year yield behaves after today's stability. Any break higher could change the tone quickly. We'll watch oil after that 9% spike to see if Middle East supply fears stick or fade into the weekend. And of course, we'll be monitoring the VIX term structure for any signs of flattening or inversion that would force us to adjust the hedge layers. 1 day left. Anticipation building. Protect the premium we've collected this week. That's the mindset. This is why we built this community. While the rest of the world is guessing, yelling at each other on television, and chasing headlines, we sit here with a methodology 20 years in the making. We trust the RSA. We respect the EDR. We keep the adaptive layered VIX hedge in place as our silent insurance. We understand that iron condors are built for days exactly like this one. Calm on the surface. Opportunities underneath for those who know where to look. And be sure to listen for any breaking news from Miss Vicky. These signals and insights are for educational purposes only and are not financial advice. Past performance is not indicative of future results. This is VixShield, your daily protection against market uncertainty.